Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Thursday, August 3rd. Market's just finished up, so let's go ahead and start out by taking a look at the S&P 500. I've got the spiders right up here on the screen right now, looking at a daily time frame. And we had a lower open, but the market recovered nicely. And as we'll see in a moment, though, it was a little bit concerning that it did sell off as much as it had into the close. I was hoping it would close above that 100-day moving average that I have on there. I added another moving average as if I didn't have enough. But this dotted gray line right in here represents the average closing price over the last 100 periods here on this daily time frame. And that's what it seems like the market's been having a little bit of trouble with. It's had that support over in here. It kind of popped above it that day, but then it's been finding these closes right above there. Now, tomorrow we've got the jobs report, so I think that's going to be perhaps a pretty good catalyst to either make it or break it near this 128, 128 and a quarter level. Really, you could say it's this range is 127.90 to 128.30. That's really got to get above here from the recent action. But we're looking at the hourly time frame right now, and we can draw on this trend line. Based on the lows from a couple days ago, it's still holding up. A lot of people might even call this a bearish wedge, so just be careful. It seems as though the market is ready to do something in one direction or the other. And realistically, with the S&P 500, I think the picture here is just too mixed to really make a strong call in either direction. So I think that defense still wins the game in here, and it's a stock picker's market. Let's take a look at the Qs. The Nasdaq 100. We're seeing a little bit better setup in here, and I think in the Nasdaq 100 we've also got it at a pretty critical area right now. We've got this prior support level right in here, or lows really. It wasn't really much in the way of support, but you could kind of make a case that it was. Then that offered resistance, and now we've got this declining trend line as well. Now we've got to keep a careful eye on these lows of the last 3 or 4 sessions as well. In particular, I think this continues to be a very important level for the Nasdaq 100, which is about 36 and a quarter. So that's going to be really most important short term. The market did make it right back up to the top of that range where we saw it on. I guess that was on Monday here. Monday's highs right in here were tied again today. Found a little bit of resistance. So, obviously this level here is $37.35. Getting above there and holding above there maybe gets this market pushing up towards that 50-day moving average. That 50-day moving average still is declining, so I wouldn't be expecting real big upside, but maybe we could get some short squeeze rally that pushes it up through there for a day or two. Similar to what we saw, actually I think it was the IWM, similar to something like this, the Russell 2000, which we haven't looked at in a while, so let's go ahead and take a look at that, what we've got on the screen. That market did make it above the recent little highs in here, and the $70 level that we had pegged is being important about a week and a half ago. So it's back up above that level, and it actually held above this $70 area. So the IWM, the Russell 2000, is looking a little bit more bullish, but then again, you've got that 200-day moving average that potentially is going to act as resistance. All in all, it continues to be the same story, which is it's a day-to-day thing. What this market really needs to heal is time. The most encouraging market out there right now continues to be this the S&P 100, the OEX, which I have on the screen right now. It continues to hold above that 100 and 200-day moving average. This prior resistance acting as support in there. But again, the main theme I want to stress here is it looks like we're at an important juncture for the market, and that it's a stock picker's environment. We're going to have to be careful. We've got mixed messages. The semiconductors also came back to the high of that range, getting back above this level for the semiconductors, 3180 or so, and holding above there for a little bit of time will do wonders for this market. But then again, breaking down below 30 and a half could really send the buyers for cover again. Google, I had mentioned a couple days ago, was starting to break down. Yesterday, I suggested that you might want to start thinking about tightening your stops in here. The stock recovered. I wouldn't expect it to go too far, but let's see what happens tomorrow. There might be some resistance up near this 380 level where we had the prior support in Google. I'm not making any recommendations in Google. I think the stock is just too crazy to make any specific recommendations. You're going to have to take a look at the numbers yourself. MDCO, Medicines Company. Stock finished out nicely, unfortunately, where I had suggested the stop. Did come into play here early on during the day, and it got stopped out of the position, so I'm not going to continue to update it. NXG also got stopped out. This is the low-price gold share company. We got stopped out break even there, or at least that's what I would have suggested. Let me go back to, my suggested stops and what might happen. 2 days ago I had one emailer complain to me about how I could have been so dead wrong in Hansen. Well, that same person told me yesterday or two days ago that they were still holding for the long term. He emailed me this morning, told me he made $1,800 or something like that. Good for him, but don't tell me about that. I just, if you're gonna complain, don't follow it up. I'm not interested in your emails, and you know who I'm talking about there. And if it sounds like I'm being mean, like I said, you irritated me, and I'm through with you. Okay, sorry for that. Let's see. We also looked at Boom. Boom is due to report earnings after the close. I've got a couple puts. Like I said, it was a small position, and it was a bet. It's not looking like a good bet at this point. I've got the August 30 puts. I think that the premium's going to evaporate in these things, and what can I say? It was a bad play. FFIV got stopped out with a very small loss on the short side, about 20 cents in there, as did Yahoo. Yahoo got stopped out with a very small loss as well. It took out these highs, so it's made this higher high right in here. And now we've got GIGM. We were looking at GIGM to move above and hold above 883 for a little bit before we took an entry there. That never occurred, so I'm not going to continue to update that. OMCL, Omnicell, I was looking for a move past this short-term resistance at $18 why do I keep saying $18? $16.73. That did not occur. I think this, still has a good chance for tomorrow. Maybe we'll keep an eye on that one. OMCL, PSSI. Also, I was looking for strength above 1989 before I was considering buying it. That didn't occur, so no play in there. SGP, Schering-Plough, we were looking to buy that potentially above $20.54, and that occurred. So now we have to maintain our stop. Let's go ahead and manage our stop. Let's put it under this rising 5-day moving average. That's 5-day moving average is about $20.52. So that essentially gives us about a break-even stop in SGP, Schering-Plough. ENER, Energy Conversion Devices, you can see where it opened right here, just below, just about where I wanted to sell the stock short. So hopefully you got involved in this one. I was looking to sell it short below 32.65. That's about exactly where it opened. I said the risk was 40 cents in there. I think right now what you want to do with this stock, it looks like it should continue lower, but I would put my stop at about a break even in ENER right now, which we'll call $32.65. But it's looking like it has the potential to continue lower from here. RIMM, Research in Motion, I had also suggested as a short. However, this stock gapped down too much for an entry. It gapped down, below this level. Like I say, don't chase them when they gap down. Instead, if they gap down, wait for a reemergence of weakness. That never really occurred. So let's see what tomorrow brings. The market is, again, at a pretty important crossroads, I think, here. But overall, if I had gun to the head to say which way I think it's going to go, I'd have to say lower just because that's the primary trend. I hope I'm wrong because personally I find it easier to trade a bull market than a bear market, but let's leave our bias at the door and see what happens tomorrow. Thanks for your time, and I'll be back this evening with another video.